Yeah, good evening, everybody. Thanks for joining ourselves this evening. I think we may get a few other people join us. But yeah, first of all, I'd like to thank you for joining myself, James, and Michael. We're directors of the Mortgage Quarter. And as requested by a lot of people we've been speaking to, we wanted to talk through the remortgage process, give you a few hints and tips, and we've got some other experts on this call this evening. So I just wanted to make you aware that it is being recorded just for our purposes. Hopefully that's all right with everybody. If you've got your camera on and you wish that not to be recorded, obviously feel free to turn your camera off. I'm going to go through a few screens this evening and tell you a bit more detail. I'll be hosting it with Michael to start with. Most of your microphones are muted, but you can actually unmute them yourself. There is a Q&A at the end of the presentation. So we've been sent a lot of questions in, so we can run through those. But feel free to stop us if you want to go through any of the information that we're talking about. So we'll tell you just a bit about the Mortgage Quarter, who we are, and sort of where we've got to today. And then on with our remortgaging master plan, we called it. So it's a really important time at the moment. Obviously, interest rates are changing a lot. Many people haven't completed a remortgage before. Some of you may have completed a remortgage. So we're just here to sort of tell you about that process and lead you through it, really. Then it's over to Youcef. Youcef, are you there?
Good evening, James. Yep, all here.
Yeah, Youcef, you're from Optimus.
Indeed.
And you'll be going through the conveyancing process. And then we have Gerard. Hopefully you're there as well.
Good evening.
Thank you, Gerard, for joining us. And you are from, or you work with Halifax. And you're going to give us a bit of an insight on how things work from the lender's point of view. And then we've got the Q&As. So a little bit about the Mortgage Quarter and how it started. I'm going to pass over to Michael, so my business partner. Michael, do you want to take it away?
Good evening, everyone. So yeah, thanks again for joining us. And I will say in advance, apologies if you hear a small dog start barking at me at any point. He's probably very curious as to why I'm speaking to lots of people and if we hear different voices. But so yeah, as James said, so the Mortgage Quarter was founded by James and I in 2018. So we were kind of ex-corporate, if you like. We worked for a big bank for, I think, about a decade each. And we just realized we wanted to kind of get back to the basics and actually putting the client first and sitting with them kind of day in, day out and actually doing the best thing for them. So we wanted to take a step away and do things our way. So far, so good. Everyone seems to be quite happy with the kind of service we provide, and we have become specialists across the whole mortgage market, in our opinion. So kind of last year, just to put a rough figure on it into why you can see why we're qualified, should I say, to obviously speak to yourselves about remortgaging. I think we lent out as a company around £165 million last year. So we do hopefully know what we're doing when you're speaking to us, and we can definitely help you if you ever want to speak to us around any form of mortgage. So part of the main thing for us was implementing the right processes. So we've got a wonderful team. I think every member of our staff is absolutely fantastic. We expanded kind of our office space because we had to make sure we had enough room for them all to sit somewhere. Service comes first. I mean, if you've not looked before, please check us out on Google, which, to be honest, actually, our Google reviews on this slide are now sadly out of date. We're now at 364, which, and they're all still 5-star, I'd like to point out. So, could be worse. We are award winning. I don't want to go too much into that. It sounds like we're trying to blow our own trumpets, but more importantly, the last kind of point about us is we're very much kind of driven in local, just working with the community, supporting and raising money. We always collect kind of toys for the various charities that support children in the area. And of course, we've got a summer fete every year. So if you ever see that popping up, please make sure you're coming along.
Yeah, thank you, Mick. Thank you for that. Obviously, we're here tonight to talk about hints and tips. Just want to go back to a point there about the whole of market. Can you explain that a bit more detail for us and what that means compared to maybe what we used to do when we worked for a bank?
So when you go in to see your bank, generally speaking, you are only speaking to one lender. So they can only give advice on their own products. They cannot talk to you about other lenders in any shape, way, or form. They're not qualified or licensed to do so. So when we say the whole market, if you walked up and down the high street and went into every single bank, you would still not be able to speak to as many as we can from behind our desk. So we have we meant to say over 90. I think it's around over 100 at the moment, but over 90 lenders. And so we're classed as kind of representative whole of market. So our job as mortgage brokers is to be experts in what we do and know exactly who to place you with. And it might not necessarily be that whatever's on the news and saying the best deal of the day is, that might not be the right lender for you based on your circumstances. So that's what it is to be whole of market.
Yeah, sure. And obviously we're getting the best deal we can for everyone's individual circumstances.
Yeah.
So that is the huge benefit. If you are looking to remortgage, make sure you are speaking to someone that is whole of market. I think someone else is joining us there.
Yep.
So me and Mick have come up with just some 6 easy steps to a perfect mortgage. We'll elaborate a little bit as we go through. And the big key, I suppose, recommendation we are giving it is preparation is key. So Mick, back over to you if you want to take a couple points to start with.
Of course. So first one, a lot of people say they think it's maybe a month, 2 months, 3 months, or sometimes even 6 months. But what we always say to all of our clients is get ready 7 months before. So we can actually apply from, let's say your mortgage is due on the 1st of January, we can apply from the 1st of July the year before. So what you'd like to do in that first month, hence the reason we say 7 months, is get all of your documents, get prepared, and we can secure a mortgage for you nice and early. The beauty of that is if subsequently rates go down or change, then if it's not in your favor, you can still say that you've secured that rate on that date with your advisor. So if they go down, fantastic. What we'll do is we will actually obviously kind of reapply. We'll get you a better deal and subsequently keep getting you a better deal to save you some more money. Being prepared is also a massive one. So a lot of ones that people don't really realize anymore, being on the voters roll, lenders don't want to lend to you if they can't find you. I know that sounds really obvious, but it is true. If they can't find kind of some sort of track record for you, then they generally are a lot less likely to want to lend you kind of higher multiples. Your credit score could be affected, as I say could, because it's not always. So obviously always make sure you're registered on the voters roll where you're actually living. Credit reports, massive one. A lot of people that we've come across in the years and years we've done this, could be something really daft, like a £15 phone bill has made them then fall foul of a good credit score. So just make sure that occasionally, even if you use the free tools kind of at your disposal, just check and make sure there's nothing linked to your name or some account that you're unaware of that could be dragging your credit score down.
Mick, on that one, just on credit scoring, because we've seen it quite a lot recently, I suppose a tip that we're always giving out just before you're applying for a mortgage or speaking to a mortgage broker, don't go applying for credit. Because that new credit search, maybe on a car finance, on a sofa that's interest free, which sounds nice, that can affect your score, and that may knock some lenders out the market. Or a car, which is typically a higher monthly cost, that may affect the amount that you can borrow and move to that right lender with the lowest rate. So it's not to say you cannot get any other credit ever again, obviously, when you're getting a mortgage, but you need to speak to a professional before you're doing it to make sure you're in the best situation for this remortgage.
Yeah. Subsequently, you're making sure that it's affordable for you, and the lender also wants to know it's affordable for you. And when it comes to remortgaging, of course, as part of, you can see on that kind of second point, if you can have an idea of your house value, sorting out a conveyancer, now that's the kind of thing we can help you with, of course. And you've got Youcef there, of course, who we work with as far as the conveyancing is concerned. And your documents to be easily accessible. That's a big part of it. So having everything up and together, be that pay slips, tax returns, tax calculations, bank statements, that's a major one. And as I've already mentioned, 6 months actually on the day you can apply for your new mortgage.
Nick, the paperwork being up to date. So something's just happened recently, hasn't it? If you're self-employed, do you want to clarify that?
So if you're self-employed, normally your personal tax returns will be due, or sorry, no, they won't be due. They'll be up until the 5th of April of that year. Now, if you've subsequently done, say, 2022s, we are aware that you don't normally have to file your 23 tax return until the end of January the following year. But sorry to throw loads of dates at you, but as of the 5th of October, you have to have that latest year available to you. That's probably the easiest way to remember. 5th of October every year, you will need your latest year's tax return completed.
Yeah, I think it's really important because if we're seeing self-employed applicants at the minute, there's very few lenders that will let us transact with them. So having it all up to date gives us access to the whole market, as we keep talking about.
Yeah,
so
exactly.
Obviously you said about the win-win there of securing the deal. So just confirming that if you secure a deal 6 months before, if the rates go down, we can get you that lower rate, and we regularly review that. If the rate goes up, well, you've secured that rate, so you're better off for when you do complete. Mick, moving on to what happens after sort of we apply for the mortgage once we've got all your documents.
Yeah, so part and parcel, of course, of what we do as brokers when we go to a mortgage lender, it's normally because using our wealth of knowledge, we know that that lender is likely to accept you. So what we do is then, of course, we apply for the mortgage, and it goes into underwriting with said lender, and there is normally a valuation on your property. So it's not that dissimilar from when you purchase a property, because I know a lot of people sometimes aren't sure between a remortgage and, say, a purchase. So it is similar in that sense, but like I say, knowing, as long as your broker knows what they're doing, you should hopefully have a relatively smooth process, as long as there's nothing that they're unaware of when actually writing your mortgage up, putting the case to a lender. Subsequently, if that's all okay and that goes exactly as you'd expect, you then get your mortgage offer issued. So that, of course, is the binding document that states that the lender will give you the money, most importantly. And then it'll normally have kind of a 6-month window on it, as we've already mentioned. And then as part of that, again, we would always look to review all of the other major provisions that you should have for owning your home. That's things such as home insurance, life insurance, wills, critical illness, income protection, just making sure absolutely everything's up to scratch, because a lot could have changed from when you took your mortgage. You might have had children, you might have, they might have moved out. You might decide that you want to kind of pull your mortgage down in term and subsequently pay it off sooner. So there are lots of reasons why you might want to review all of those things. And then, of course, we get to the final part, which is the day of completion. And then if you've borrowed more subsequently, such as home improvements, debt consolidation, giving a gift to a loved one, then that's on that day, all of that money would be released to you by the conveyancer that you subsequently picked earlier in the process.
Mick, it's one of the questions that we've been sent prior to doing this tonight. A lot of clients will think, should I go to my bank directly? Should I stay with them? Or should I look for the whole market? So obviously we're reviewing that every day. What are your thoughts around that in a minute? And there's a little bit of a difference, isn't there, if you're staying with your lender?
Yeah, so I think the term remortgage is generally bandied about for all of them, but what we would call it is a product transfer if you're staying with your existing lender. And that's purely because it's a lot less underwriting, if you see what I mean. So because they've already got your mortgage, they generally will roll over your deal as long as there's no arrears or no problems. We can, of course, do that for you with 99% of mortgage lenders. So we can still give you that advice by checking the whole of market and making sure that there isn't a good reason for you to subsequently go to Santander, Nationwide, whoever it is best at the time. So yeah, very important to still consider those options. There are some lenders who actually do reward loyalty. So they will give you a better deal because you've already been a client of theirs. So we will always check those things for you to make sure you're getting the best deal, however it looks.
Okay, well, thanks for that, Mick. Bit quicker this slide here, but this is just things to consider, or fees to consider at the top there. Just want to run through those.
So yeah, most lenders will have an arrangement fee. Depending on the loan size, it'll either be worth you having one or not. But again, your advisor will go through that with you. Legal fees, a lot of lenders are offering cash back so that you don't actually, you don't effectively pay for your legal costs. But again, your advisor would run through that at the time, depending on what the best deal is for you. Now, broker fee, there are some providers that, some brokerages that don't charge a fee. We personally do, so our typical fee is around £399. We very much kind of stand by that insofar that you get what you pay for. We will hold your hand, if you like, all the way from kind of application or decision in principle all the way through to completion time, and subsequently be with you the whole way, helping you with legal process, make sure that you're updated with the application and just generally kept in the loop to get you where you need to be. Most valuations are actually free when it comes to remortgages, and that's purely because a lender goes, right, well, we want the business, so subsequently what we'll do is we'll offer a free valuation to go out and check on the house.
On arrangement fee, I just want to bring up again, so some of people watching might have seen in the news at the minute that Skipton have brought out a rate which is extremely low. But was it 3.35?
Oh, sorry, my camera went there.
3.35 for Skipton, which you may be seeing that in the news at the minute, which is grabbing a lot of attention. But looking at point number one, arrangement fee, they're actually charging 5%. 5% of your mortgage balance. So a quick working out that we did earlier today, if you've got a £200,000 mortgage, that 3.5 rate sounds fantastic. However, they're charging you 5% fee. So, overall, that actually works out of a rate of 5.85. So that's where you have to be careful, particularly shopping around at the minute, that you're working out correctly to make sure it's the best deal.
Yeah, and that's where it's very important to get advice and speak to your mortgage broker rather than just, it sounds great, I'll go for it. And that's why, people come to mortgage advisors generally to make sure they are overall getting the best deal.
Yeah, and then last one there, you probably all read it all so far. So reason to remortgage. If you don't renew your mortgage, you will go on to a standard variable rate, which is the bank's rate, which is typically higher than fixed rates at the moment and trackers.
Somewhere between 8% and 8.5% at the moment.
Yeah, which is quite scary. And you can generally borrow money for most reasons: home improvements, debt consolidation. Some people are paying off their cars, credit card bills. Things have been tough over the last few years, so you can consolidate. Some people might want to treat themselves. You mentioned about gifts. Some people borrow money for deposit for buy-to-lets. And we would always talk about reviewing your term on your mortgage. So that's a fairly swift review of remortgaging. In there, we didn't speak too much about the conveyancing process, another name for solicitors getting involved when you move lenders, which some people don't understand or aware that is part of the process. So Youcef, who works with a lot of firms, is now going to run through a few slides. So Youcef.
Fantastic, James. First of all, thanks to James and Mick for putting on this session. It's great to have an opportunity to talk to everyone this evening about conveyancing and the various options that you have available when remortgaging your property. So we talked to you for between 5 and 10 minutes this evening just about who Optimus are, where we sit in the market, and exactly how we can potentially help you as clients further down the line. If and when you decide to work with the mortgage quarter. So first things first, I don't expect many guests on the call today to have come across Optimus. We primarily work with mortgage brokers in the market, and we've been operating since July 2019. So in just under or just over 4 years, my apologies, we've completed over 80,000 successful remortgage transactions. So a really large sample size of data from which we analyze and just work out how we can improve and speed up the process. And we feel like we're able to bring a certain level of expertise, but just in line with our company slogan, we be delivering our remortgage products with speed, service, and certainty. And they're 3 key terms that I'll touch on a bit later on in my slides. As a business, Optimus, we're able to complete our transactions, our remortgage transactions, 16% quicker than if you were to potentially go direct to a lender, or even in some circumstances, maybe a local solicitor. So do bear that in mind as we proceed through the call and in the in the coming weeks and months. And last but not least, I was really keen just to share with you a little bit more about the wider organisation that Optimus is part of. So here at Optimus, we've been very fortunate to be supporting the Mortgage Quarter for the past 18 months, 12 to 18 months, and in that time, as I said, we've sort of grown our level of business. And one of the reasons why we're trusted by the Mortgage Quarter is because we are part of a much larger organisation called the Landmark Information Group. Now, for those that maybe haven't heard of Landmark Information Group, we are a property data and technology organisation that has been serving the property market for over 40 years. We are made up of 14 individual business units, with one of those being Optimus. James, if we could just have the next slide, please.
Yeah.
Thank you. So we are part of a much larger operation here at Optimus, and we're in a very fortunate position to be supported by both Landmark and in the top right-hand corner, the Daily Mail General Trust. So I will just caveat that in saying that it's nothing to do with the publishing division. Don't want to upset anybody on the call, but rather Daily Mail General Trust, who are a venture capitalist, and they have invested quite heavily in the property market with a view to just bring in greater certainty to how property is transacted. And there's really nobody else in the market that can deliver the products that we deliver with as much expertise, experience, and service. So the key thing here is, again, don't expect everybody on the call to remember this, but it's just to give you some reassurance that if you do end up appointing a conveyancer through Optimus, you will be working with an organisation that is a leader in the market. Thanks, James. So what I'd just like to do now is just take a minute or two just to explain exactly what your conveyancing options are when you come to remortgaging. So just to circle back to what James and Mick have already explained, they'll run through the mortgage, look through the market, accessing whole of market for you. And once your mortgage offer has been issued, you would then have a decision as a client to appoint a conveyancer of your choice. And traditionally, there are two different options, two different routes that you can go down. Now, with the majority of lenders in the market, they offer something called a free legal service or a fee-assisted service that the majority of mortgage advisors may talk to you about. And on the right-hand side, you'll see there's also a cashback option. Now, I'm sure you're going to be scanning as I'm talking, so I'm not going to go through absolutely every one of these points. But what's key to point out here is the free legal service is typically offered by your lender as part of the mortgage application. So what you would be doing is you will have a conveyancer appointed by through a law firm who typically is in contract with the lender. And in the majority of circumstances, obviously, they are working for the lender to make sure that they go through the remortgage conveyancing as quickly as possible, of course. But the majority of the time, the focus is on the lender and doing what's best for the lender. Now, something that we advocate through Optimus is working with your mortgage broker to secure a cashback deal. And of course, James, Mick and the team will obviously work out what's best for you as individuals. But what we feel is a much more secure option for you is to potentially accept a cashback product that's available with the lender. And what you'll be able to do is effectively take that cashback from the lender and use that amount to cover the legal fees that will be offered by a conveyancer through Optimus. The advantage of this is that through Optimus, I work alongside James, Mike, and the team, Mick, sorry, and the team to control the transaction. And we do that for a number of ways. So we've got an electronic system that allows us to provide real-time updates for you. We also have an in-house customer service team who regularly monitor your case just to make sure everything's moving as quickly as possible. And then lastly, between myself as the account manager and the mortgage brokers at the Mortgage Quarter, will be available at the end of the phone to answer anything at short notice. So that's just a more secure option for you, where the law firms will be acting for your best interest, whereas with free legals, traditionally you're working for the lender. And in addition to that, when we do come to appointing a solicitor on your behalf, that's fine, James. We will be represented by solicitors that we verified and vetted over quite a high volume of cases. And these are relationships that we've maintained, again, pretty much since our inception in 2019. So we do have a level of trust in our solicitors. We have direct contact details for anybody that be working on your case, and those details will be made available upfront. Whereas traditionally with free legals, sometimes that information can come at a bit of a later date, and also your mortgage broker is less likely to know who is dealing with your transaction, and therefore a lot less influence and control over the process. So as I said, just to round up, cashback deals, typically 250, 300 or 500 in the market. Your mortgage broker would let you know what that amount is. They would then come to Optimus. We would appoint a solicitor from our panel, and then we would control that process from start to finish, working for you. And that leads me on nicely to exactly what we can offer you through Optimus. So just 3 very quick points to finish off. Firstly, we really strongly advocate the level of control that we will have over your transaction. So if you are remortgaging 6 months in advance, we'll introduce you to a solicitor up front. We'll be then working with you alongside your mortgage broker to make sure that every month we check in on your case, and the majority of the time it's myself managing that for you along with your broker, so you'll have some familiarity. We do have a dedicated customer service team in-house at Optimus. So these are all individuals that have worked in the industry before, that understand the process, and we have a help desk that you can phone in and speak to us Monday to Friday, 9 to 5. So you've got that added level of support. And again, these are our conveyancers that we've worked with before, so we know on a personal level. And last but not least, we are competitive on price. We offer an opportunity to provide a quote that matches the cashback amount from your lender. And we also offer a fixed fee service as well, where all of your fees are listed up front. Your mortgage broker would take you through that quote as well, and it just eliminates any nasty surprises for you. So as I said, when you are budgeting, if you're debt consolidating, you want to make sure that your fees are set up front, so you know exactly what you're going to be paying and then what you're going to be left with on the day of completion. And as I said, typically it's a much more transparent way of dealing with conveyancing by taking the cash back as opposed to going with the free legals.
Yeah, thank you, Youcef.
No, that's absolutely fine.
I've got you've got one more slide there actually coming
That's okay.
in, but that's just an example.
Yeah.
But I was going to sort of mention it as well. The reason that you're on the call is because we've been working with you for 18 months because we had a lot of issues with free legals in the past. Unfortunately, not everyone gets ready 7 months before their remortgage, which you would hope gives most conveyancers enough time. But if you're remortgaging later than that, free legals can take a lot longer than if it doesn't complete in time of your renewal date. You do go on to that standard variable rate. Earlier on, Mick mentioned the high rate of 8.5% at the minute, so you'll be hit with a higher payment. So that's why we felt it was really important to get you involved this evening to explain that.
Absolutely.
So
thank you for the opportunity, and absolutely fine.
Thank you. I'm just going to stop sharing my screen, and then we've got Gerard to join us from Halifax, and I believe, Gerard, you're going to share your screen, if that's okay.
Yeah, I'm actually having a few technology issues, so I'm going to have to freestyle it, unfortunately, or fortunately, whichever way it is. I think I'll reiterate Youcef's comments about being able to come and join you tonight. I think it's a tremendous opportunity. I work for Halifax Intermediaries and Scottish Widows Bank, so the branch of the bank that deals directly with mortgage brokers and only mortgage brokers. And it's a real privilege to be here tonight. So there's a few things that I wanted to pick up on, and not just necessarily talking about Halifax and Scottish Widows, what we can do for you, because I won't be. I want to talk about the things that a mortgage broker can do for you, and the things that I see as a lender that will potentially slow your transaction down and or hinder you next time. So I think one of the things that Mick and James have talked about is this 7 months in advance. I think it's really, really important to be in advance, to be prepared, and doing some simple things like if you've had contact with your broker, making sure that things like their emails are in your safe list on your email account, making sure that their telephone number is in your phone under what you want to know them as, because they will be trying to get in contact with you. They will try and communicate with you. So making sure that you've got those things and they're safe and they're not going to go into your spam is really, really important. In the same way that if you're using a conveyancer, whichever conveyancer you use, making sure their email address and contact details are in your phone, so that you can keep in regular contact if you need to. There's always going to be a phone call at a strange time of the day. Maybe you're out walking the dog or on your lunch break, and if you know who it is, then you're more likely to answer it. So making sure that you've got your contact details really up to date. There's a few other things in terms of credit scores and credit files. James, I think, talked about voters' roll and making sure you're on the voters' roll. Is absolutely correct. Lenders will absolutely, and it, not just the lender I work for, but the lenders will absolutely want to know who you are and where you've been. And making sure that they can find you is a really crucial part of that. I think the other thing that you can look at on things to do with your credit file is looking at things that you've maybe only got £100, £200 on that you're maybe paying £20 a month on. Can you clear those up? Can you get rid of them so they're not on your credit file any longer? Because the less things you've got going out will mean that actually the more flexibility a mortgage broker will have in placing you with the right lender for you at the time. If you're on this conversation, you're interested in, or if you're on this meeting, you're interested in what a mortgage broker can do for you. And a mortgage broker can do far more for you than Dave down at the pub. Because Dave down at the pub will have an opinion about an opinion that his dog had about an opinion. Listen to your mortgage broker and take their advice. Clearly, I work for a bank. I still use a mortgage broker to sort my mortgage out, even though I work for a bank, because I know that maybe the bank that I work for might not be offering me the best deal that I can have at that particular moment in time, because my circumstances might be different. So trusting your mortgage broker is really, really important. I think the other things I definitely do is ignore the news. When you see the fact that average rates for when you're changing your mortgage are 6.5%. Well, average rates might be at 6.5% if you include lenders' standard variable rates, but actually the rates that you can move on to are probably a lot lower than that now. And I'm fortunate I only have 2 lenders to worry about, but a mortgage broker will have access to 100+ lenders to look at, and interest rates that run into the thousands of deals that are out there shaped for your circumstances. So trust them on that. I think very definitely getting your paperwork in order, making sure that you're reviewing everything that's attached to your mortgage is absolutely clear advice as well. As a lender is looking for certainty. So if they can see certainty in the documentation you're giving your mortgage broker, which your mortgage broker will then give to your lender, they will be more likely to get you a mortgage offer quicker and on the best deals possible. Lots of people at the moment are talking about whether or not they should go 2-year, 3-year, 5-year. That's the advice piece that a broker can give you and looking at what they can do. But actually, when you're doing that remortgage process, I think it's really, really important not to look at necessarily this remortgage process, but also thinking about the next remortgage process. So if you're 2 years and looking at doing a 2-year rate, what's going to be different in 2 years' time? Are you going to be near a threshold that means you might get a cheaper deal if you paid a little bit more into your mortgage? Is it a question of actually making sure that those home improvements that you're doing, that you've got all the certificates and the warranties, the fence certificates when you've had your windows redone and your doors redone to add some value to your property? Make sure you've got those certificates. There's a massive thing at the moment about green mortgages and sustainability and solar panels and batteries and air source heat pumps. Whatever you do, keep the certificates, put them in your mortgage file, make sure you know exactly where they are, because the remortgage solicitors may need those. And if you haven't got them, it will slow the process down. I think the other things that you can do is keep the documentation your lender sends you. So if your lender sends you an annual mortgage statement, keep it safe. Put it in that mortgage file so that it's all in one place. So when your mortgage broker needs it, you've got it to hand. because it makes their job really easy if you've got all the documentation to hand. The more time that they have to do things, the better the deal that you will get, because they're not having to rush it and push it through and get it done in a hurry. Mortgage brokers, there are reputable firms out there. There are unreputable firms out there. Using firms that have fantastic reviews is normally a good idea, whether that's your builder, whether that's your plumber, whether it's your conveyancer, or whether it's your mortgage broker. I'd absolutely recommend looking at reviews and judging who you're using and why. And that's really all I've got to say, unless anyone wants to. I think we're doing Q&As.
Yeah, Q&A's coming up. Gerard, thanks for that. I think you really echoed what we started with there, is that preparation is key, getting your paperwork in order. That's why we say 7 months. Some of brokers say 6 months, but you've got a month then to get it ready so we can secure your rate. So, yeah, thanks for that. Really key bit of information, really, and echoing what we said. So, thanks for that. Hope everyone's taking some little snippets or something away from that. As we promised, we'll open up to Q&A. We've been sent quite a few questions. I don't know if anyone wants to write the questions in the chat, or you want to come off from mute, but feel free. Feel free to talk. Just give you a moment to do that if you want to come off or write a question in. If not, I've got a list of questions that have been sent over. Mitch, should we kick off with one? And Gerald,
Yeah,
you might get.
let's have a look.
So, any advice on remortgaging with Help to Buy and when to pay it off? Someone's opinion there.
I'll say thanks for that question, James. That's that's always a fun one. So Help to Buy, of course, was a fantastic scheme that was brought out and that helped a lot of people buy a new build home in the last kind of 5-6 years, maybe more than that now. So you don't start paying interest on your Help to Buy loan until you've had it for 5 years. So it's actually in the 6th year you start paying the first amount of interest on it, but it is effectively interest only. Now, we do tend to get a lot of our clients come back to us and talk about, shall we kind of remortgage, shall we pay it off? Now, if you do pay it off, it gives you a lot more flexibility, because effectively you haven't got a second charge on your home. Now, I don't know how much people here, of course, know about things like first charges, second charges, but a normal mortgage would be classed as, say, a first charge. So that is your Halifaxes, your Scottish Widows, your Santanders, etc. But Help to Buy is then normally ranked after that and would subsequently be called a second charge. Once you get that paid off, it means that you can do other things, such as you could borrow for, say, debt consolidation, which, for example, Help to Buy generally don't like. So if you've cleared that off, it can be kind of a good way to have more flexibility with what you want to do with your property. And also, it means you own the whole thing. One of the things with Help to Buy is, let's say you bought a property for, I'll use nice round figures, 300,000. They gave you a 20% loan to help towards the property. When it comes to, say, remortgaging 5, 6, 7 years down the line, your property might be worth, say, 350,000. So you will then have to pay Help to Buy £70,000 back. So they will also get a percentage of the uplift of your property, because they lent you 20% of the property value, not a flat loan. So what we always say to everyone is it's down to everyone's circumstances. We speak to you, we look at your finances. Is it affordable? And what do you want to achieve? If you want to borrow other funds to do home improvements, etc., right, then it might be time that we start looking at, can we clear your Help to Buy loan, put it completely in your name, so it's just the mortgage and nothing else, and subsequently be more flexible with your choices. Oh, you're on mute, James.
Oh, sorry, mate. Yeah, I think that was a very detailed response. So you've covered off, Help to Buy, pros and cons. So thanks for that. Any other questions? Someone's come off mute, I believe.
Yeah, I have a question, please.
Yeah.
Can I remortgage so that I can let my house out and release equity to buy another one?
Yes, in a nutshell. It's again very broad question, because it is down to kind of the facts and figures and kind of making sure it all adds up. So what you're talking about there is what we call a let to buy, and that is where you change your current home into a buy to let property. So then it's a lender will come out and have a look at your property and work out what the rental valuation would be on your house, and subsequently then they would work out what the mortgage that is affordable in their eyes is based on that kind of rental value, and then subsequently they'll give you an idea, or we would give you an idea as to how much that would release to subsequently buy your new home. So yes, absolutely possible.
Thanks for that. That's from Alison. Thank you, Mick, for answering that one. I think a big one that we've been sent quite a few times. Mick, should I fix for 2 years, 3 years, 5 years, 10 years?
Well, you've got Gerard laughing.
I think we've got 4
one of
years.
the-
We've got 7 years as well. We've got 7 as well.
That is true. Well, you've got Gerard laughing from the what is the biggest mortgage lender in the country. So that kind of says it all, really, doesn't it? Again, it's down to your personal circumstances. And I suppose this is the key part of our job as brokers. We have to get to know your circumstances to subsequently give that advice. Now, for the first time in over a decade that James and I have done this, and all the millions upon millions of pounds we've lent out, 2-year money is more expensive than 5-year money, which is quite rare. It's the first time it's ever happened in our whole careers. So it's very
And
much
why is
down.
that, Mick? There's a reason, isn't there? What I suppose the banks are banking on.
I suppose that there is an overall view that money is, when you look at swap rates, money is cheaper over the longer term, whereas previously it was cheaper. Say again?
Do you want me to jump in on that one?
Please feel free, Gerard. You probably have that information more to hand than I do.
So the interesting one that we'll have every month is we'll have a flurry of activity leading up to the Bank of England, probably on BBC, getting excited about the fact that the Bank of England's meeting and what's going to happen with interest rates, which pretty much has absolutely no correlation to how banks actually lend money, because not very many banks lend money based on the Bank of England base rate. It's all to do with effectively how much interest we have to pay to borrow that money, and where we get it from, thinking a rate's going to go up in the next 2 years. Are they going to go down in the next 2 years? And they're going to go up in the next 5 years, 10 years. And that's called a swap rate, where we're basically swapping money around and trying to buy it at a cheap enough rate so that we can then lend it again at a rate that's competitive. And at the moment, the economic outlook when you buy money is that 2-year money, as Mick has said, is more expensive than 5-year money. Now, over the last week, 10 days, those swap rates, and if you really want to go and have a look at it, go on to chathamfinancial.com. They've got a great website that shows you swap rates on a daily basis, updated 3 times a day. And effectively, they will then show you what's happening with swap rates. And they've been very stable in the last few weeks, which is why you started seeing lenders becoming more and more competitive in their pricing on remortgaged products, because of the fact they've got stability, and everyone wants stability. That's my answer.
Yeah.
And should you go 2, 3 or 5, 10, 20, 80?
You can get 40 as well off Kensington.
Yeah.
It's confusing, isn't it? But I think you said it's personal circumstances, depending on what
Absolutely.
fits your need, is the most important part. And Gerard, I think I saw today in the news, competition's increased so much. It's the most of products that's been available in over 10 years, even when rates were low. Is that right? Do you see that?
Yeah. If you look at rates now, and the number of lenders that are changing their rates almost on a daily basis, a weekly basis, I'm thankful that I work for the lender rather than a broker, because brokers have got a very challenging job keeping on top of it. But actually, they do keep on top of it, and they will do the things that are right for clients. Yes, rates aren't what they were 2-3 years ago. That was an artificial market driven by lots of different things. We're probably getting back to a more realistic level, and they will stay static. And that's where the preparation for things in advance, like paying a bit off your mortgage if you can afford to do that, doing some home improvements if you can afford to do that to increase the value of your property, will mean that maybe next time you come around in 2, 3 or 5 years, the value of your home against the value of your mortgage is better, and therefore you get a better rate.
Yeah, lovely. Throwing it back out. Any more questions?
Yeah, hi guys. Thank you so much for running the remortgage webinar. I've got my mortgages coming up for renewal in sort of 8 months. I'm coming off a sort of a 5-year fixed at 2.5. Obviously, I'm concerned that my payments are going to skyrocket. Can I sort of extend my term just to, make my payments cheaper, over the next sort of couple of years?
Yeah. So very, very much so. So it's when you come and see your broker again, it's all down to kind of discussing your personal circumstances. So when you come up and say, yes, actually, no, that's not going to be affordable for me to just roll over my current deal with my existing lender, that's when we kind of look at the whole market of options. So that might be extending your term until you can actually extend in theory your term up to the age of, say, 75, even further in some circumstances. So there are definitely options available to you if you're worried about kind of what your payment's going to look like in 8 months' time. Now, what we'd always say, we've already said it in earlier in the webinar, that as soon as you tick into the month 7, get in contact. We'll discuss that with you, and obviously we can get subsequently everything ready to make sure that you're in the best position possible, so that when you're on completion day, you're not sat there going, how am I going to make my payments this month?
Okay, that's great. And then just one other question is, if we say get something locked in, what happens then if there's a better rate coming up that we find somewhere else with, say, like a different lender or with the same lender, for instance?
Then we would always look to reapply for you. Ultimately, what you pay for, if you like, is our service going forward. So we would always make sure that if someone comes out with an amazing deal, we will reapply for you. We will get you that deal if you're eligible. Obviously, that's obviously something we always have to say. But yeah, that's always something we would do for you.
Okay, that's great. Thank you.
Thank you for the questions there. I think one thing to add on the term as well, because we are extending terms for a few clients at the moment, is that we're actually looking at it as a temporary fix. Rates have increased over the past year. If they do go back down, we will be doing more remortgages in the future. So that's something to take on board. Just because you're extending it now doesn't mean you have to stay on it forever. Last shout for any more questions. What we're going to do is, I believe we've answered the questions we've been sent as well throughout the webinar. I'd like to thank everyone again for attending this evening, and thanks for Gerard and Youcef for joining us, having your input. It's really much appreciated. We're probably going to turn this into a monthly session. There might be around other things like moving home, self-employed tips, things like that. So it'd be great to get your feedback. There will be a follow-up email on that. So it'd be great to hear from you, see how you felt tonight went. Hopefully the technology worked well. Yeah, and hopefully it's been worth your time. So yeah, be looking forward to getting your feedback. We'll be sharing a bit of information on that email for you, and a bit of the messages from tonight we'll be sharing on our socials as well. So feel free to give us a follow. Yeah, so it's a thank you from me.
Well, thank you very much from me, and hopefully it wasn't too bad looking at us whilst we talk to you about the remortgaging process.
Have a good evening, everybody. Thanks again.
Thank you very much, everyone.
Thank you.
Cheers. Bye-bye.
See ya.
Bye.
Thank you.